Good afternoon from Mauritius, everyone. Thank you for joining our webinar today, where we will be discussing the state of digital transformation in financial services. My name is Benazia Saidu, CEO of the Mauritius Africa Fintech Hub, your host and moderator for this session today. While we wait for more people to join us, I would like to launch a quick little poll to explore with you all in the virtual room today on what aspect of digital transformation that we'll be discussing today that you are the most excited about. We're going to talk about AI, cybersecurity, data management, ethics. These are all themes that are hot topics when it comes to the evolution of financial services, not only in Mauritius, but on the context of the African continent and also at a global stage. For those of you who do not know us, we are an association of companies who are actively involved with the development of fintech. And I actually have the pleasure of welcoming 3 of our members on the panel today to share the insights on the theme of the day, starting with Uways Kureeman, who has this year taken the lead role as country head of director of Peach Payments, who I would like to congratulate again. Uways will be providing us with an overview of how digital transformation is evolving in the financial sector. Thank you, Uways, for accepting our invitation and being a speaker on our panel today. Next, we will be hearing from Sanjay Mungur, CEO and founder of FinClub, one of the very first fintech operators and who has very strongly been pushing for its development in Mauritius. FinClub was the first operator to receive a license under the peer-to-peer rules in Mauritius, and Sanjay will be sharing some insights into how ethics and the whole secure integration of AI technologies in financial services can be leveraged on. Thank you, Sanjay, as well for being part of our panel today. And we will close off the session on the theme of ethics in digital transformation with Arvind Nundloll, IT manager of Blink by Emtel, a company who has been championing digital innovation over the last decade in Mauritius. Arvind will walk us through some of the ethical considerations surrounding data use for personalized services. Thank you, Arvind, for making this time as well for being part of our event. So we can already see some results coming in on our poll. I can see that AI is winning, no doubt. I would like to also take this moment to thank everyone who registered and who are in attendance in this virtual room today. This is a discussion that we believe is very important to engage with our community, with you in the room, as the digital economy, as we know it, is growing. Themes like AI, cybersecurity, ethics are all currently under development, and this is why it's important to engage as many stakeholders in the discussion to agree in the direction that things are going. So we're just going to give it another few seconds to wait for more people to join in. Of course, I encourage all participants in the room to note down your thoughts during each section and submit your questions using the Q&A function on Zoom here, which you will find at the bottom of the screen. You can leave your questions anonymously. You can also choose to raise your hands if you would like to ask your questions orally. And when we get to the Q&A section, we will be able to unmute you and you can ask your questions to the speakers directly. So I wish you all to make the most of it. Ask your burning questions to our speakers today, as we will be kicking off with Uways as our first speaker. Uways, I invite you to share a few words about yourself and open us the discussion on the importance of the digital implementation of AI, cybersecurity, data management within the realm of financial services. I open the floor to you. Please take it away.
Thank you, Benazia. And thank you for the introduction. Just confirming if everyone is seeing my screen.
We can see your screen.
Okay, perfect. Okay, let me start by first introducing myself. So I'm Uways Kureeman. I'm the country head and director for Peach Payments in Mauritius. So I have more than 12 years of experience delivering software solutions in Mauritius and in Africa. So I've joined Peach Payments as country head and director this year. So exploring the fintech world in Mauritius and in Africa. So very excited and interesting world, I would say. So I'll allow me to just introduce Pitch Payments, and then I'll dive into today's overview. So, Pitch Payment actually offer online payment and gateway solution, operating across 4 countries, namely South Africa, Mauritius, Kenya, and Eswatini. So Pitch Payment allows merchants to collect payment online. So that's a solution that is now that we are offering in Mauritius and the other countries. Okay, let us start with the overview. So I'll be covering in an introduction in terms of what is digital transformation in the financial sector. I'll also go through the 4 keywords when we look at digital transformation. So that would be AI, cybersecurity, ethics, and data management. So just to start for the overview. So when we look at digital transformation in finance, we're looking at different aspects of how it's impacting the whole sector. So first, in terms of operational efficiency, so we've seen tools and tools automating processes. So we've seen processes such as KYC, processes such as underwriting, compliance, or reporting that are increasingly automated today. So that reduces, of course, costs, and also, and most importantly, manual errors. We've also seen tools enhancing customer experience, so more personalization when you're accessing your mobile banking app, for example. So banks or financial services are leveraging on data and being able to tailor-made the offering to customers. And of course, through those digital tools, we're looking at being able to access your bank 24/7 anywhere and anytime in the world. Those tools are also allowing the management to make more informed decisions, so more data-driven decision. So those tools, coupled with, of course, AI tools, are pushing how companies are doing analytics. Those tools and are also allowing companies to mitigate risk, so do a better risk management. So using data to proactively highlight frauds and mitigate those risks. So we're also looking at tools allowing companies, institutions to innovate and change how they're doing business. So creating new business models. So Pitch Payment is one example of that. We've seen with digital tools, we are allowing the banks to collaborate with fintech organizations, the likes of Pitch Payments, to offer solutions to end clients through merchants. So these kind of tools allow this collaboration between different institutions. And of course, digital tools allows companies to use and to offer new technologies. So we'll be talking about blockchain, we're talking about cryptocurrencies, we're talking about those kind of technologies. And of course, when we look at regulatory compliance, so we're looking more and more at what we call RegTech solutions. So digital tools helping institutions to remain compliant or to comply with regulations more efficiently, I would say, compared to manual process, so automating reports or even monitoring processes. And of course, those tools allow companies to remain to enhance data management, so improving transparency, also facilitating to be better compliant with regulatory requirements. And we've also seen those tools giving, of course, a competitive advantage to institutions. So, of course, so companies are now being able to adapt quite quickly to changes in the market. I would not say adopting digital tools is easy and quick, no. But if you have the proper foundation and you have the fundamentals ready, you can easily adapt to new technologies. So very important to have the proper framework and the proper baseline to be able to accept and start using those digital tools. And of course, through those tools, you're also increasing your market reach. So through digital channel, we're looking at even in terms of marketing, in terms of talking or supporting your clients. So the digital tools have greatly changed this sector. So now let's dive into the importance of those four key terms. So AI, cybersecurity, ethics, and data management. So I'll go through an overview and allow the other person on that webinar to go through in-depth discussion about those points. So first, when we look at AI, it's not a background chosen on purpose. But when we look at AI, we're looking at so automation of processes. So one key term that we've heard quite like RPA, like robotic process automation, is a term that we've heard quite not recently, but I would say that has been adopted quite heavily recently. So those kind of tools like automate routine tasks like daily data entry, tasks, transaction processing. So these free up human resource, of course, for more strategic and more important activities. For AI, we've seen enhanced customer experience. We've seen AI-driven chatbot, virtual assistants, who can now give 24/7 customer support, can answer queries, or can resolve issues quickly. We've seen AI enhancing data analytics. So as mentioned earlier, so we've seen AI analyzing vast amount of data to identify patterns, trends, helping the financial institutions to make more informed decisions and develop personalized services. AI models now predict and mitigate risks simply by analyzing historical data and recognizing potential frauds on credit, on payment, for example, on payment being processed. We've seen AI helping in monitoring transactions live and ensuring those payments or those transactions remain compliant to financial institutions. So being in the payment industry, I relate to being compliant to international bodies for the like of Mastercard, Visa, and so on. So having those AI tools actually helps to give a live monitoring to be compliant. We've also seen AI algorithm analyzing market trends, market data in real time, enabling better investment strategies and portfolio management. In terms of cybersecurity, so we're looking at, of course, at tools for protection of sensitive data. So when we look at financial institution, we're talking about handling of vast amount of very sensitive data, of course, including personal information and financial records. So very strong cybersecurity measures are essential to protect this data from breaches and unauthorized access. When we look at regulatory compliance, so the financial sector actually is heavily regulated. So organizations must comply with regulations such as the GDPR. For us in payment, we should be compliant to, we should be PCI DSS compliant, and others. You've got lots of international standards depending on which sector you are in. So these standards mandate very strict data protection measures, and if you fail to meet these requirements, it can result in severe penalties, fines, or even being barred from being able to give certain services. Of course, having the proper cybersecurity around your digital tool help build trust, something that customers, very key for customers today. So robust cybersecurity practices would definitely enhance customer confidence and loyalty in your services or product. Of course, we've heard lots of cyber attacks recently. So cyber attacks can, of course, lead to significant financial losses. So not only from theft of data, but in terms of recovery. So once your data is breached, you have lots of costs in terms of how to recover the data, so ransoms and so on and so forth. Legal fees, because you're dealing with those standards like GDPR and so on and so forth. So legal fees, and of course, and most importantly, would be reputational damage. So investing in the proper cybersecurity tools, of course, help mitigate all these risks. And as financial services adopt these new technologies like blockchain, AI, mobile banking, so even the cybersecurity aspect of it must evolve to adapt to those new technologies. So having the proper framework around each of these new technologies would definitely help. So I would say being manual and being on paper, it was not complex to have to provide a business continuity plan, but being digital is key to have a proper business continuity plan in place. So a cyber incident can disrupt a whole operation, so leading to a total downtime and, of course, loss of service or loss of data. But effective strategies around that would mostly be beneficial, of course, and allow for proper business continuity. And of course, even the threat landscape, I would say, is constantly evolving. So more and more sophisticated. It's not the technology being sophisticated now. The attacks are also more and more sophisticated. So institutions should always stay ahead of those threats, of course, through partners. That's where working with qualified and experienced partners is very important. So those partners would enable institutions to be ahead of those threats. So when we look at ethics, we're looking at trust and reputation. So ethical practices, of course, build that trust between institution and customers, bringing us to being transparent in terms of what kind of data you're keeping, what are you doing with with the data, with whom are you sharing the data. So very important. So we've seen recently cases. So taping, of course. So there's a question of ethics, like you've trusted a company with your data. So you're talking to someone, it's private information, and how private of the institution keeping your data. And of course, the ethical practices should, of course, promote fairness. So not using customer data for other activities except for which the person has I would not say writtenly approved, but has consciously approved of the use. And of course, everyone would like to innovate, and to innovate, most institutions would like to use historical data and innovate, but institutions should consider responsibly using those data to be able to innovate in a proper and ethical way. So also a proper ethical framework, I would say, would help organization identify and also mitigate risks, which be it, from fraud to cybersecurity threats. So being ethical would also support that. And of course, if you're looking at long-term sustainability, you're looking at establishing proper ethical practices, of course. So next and last key point would be data management. So now everyone is saying data is gold. So data is the next goal. So I would say, of course, data allows us to make more, of course, informed decision. So effective data management provide an accurate and timely information. So enabling organizations to make decision on time and proactively. So this is very crucial for strategy development, for risk assessment, for identifying growth opportunities. So properly managing your data allows institution to also better understand customer needs and preferences. So the insights can lead to personalized services, improving customer satisfaction and loyalty. The financial sector is also subject to, as mentioned, to strict regulation in terms of how data is being handled and reported. So having, of course, a robust data management practice help ensure to be always compliance, be it on your website, be it in your database, be it in your data lake, be it on your CRM. So any solution that you're interacting with data should have the proper regulatory compliance practices around. And of course, basic security. So having the proper security around even your emails, your SMS, your WhatsApp messages is key into protecting company information. Of course, having the proper framework in place, this would allow you to scale up and to grow and expand your digital offering. So without the proper framework around how you're managing your data, it would be difficult or very costly to scale up your digital offerings. So let's dig into how we should be balancing innovation with cybersecurity, which is very key, as discussed. So I would say first, of course, it starts from day one. So sometimes, not all the time, but sometimes solutions are developed and then the cybersecurity aspect of it comes in place. But I would say to incorporate security by design, so have a proactive approach, to integrate the cybersecurity measures into the development processes itself, and do not wait for cybersecurity to come at the last module. And of course, through that, you should be able to have an agile approach. So iterative development, having penetration testing on modules as and when they're being developed. And of course, involve as cross-functional teams, your cybersecurity expert, your product development team, and your engineers to be able to integrate cybersecurity in the whole life cycle. And of course, so having a robust data governance around how you're classifying, you're categorizing your sensitive data is key from the start. And of course, maintaining a proper log, a proper access control, monitoring is key. And it's becoming more and more now, but so promoting culture of security awareness is also very important. So from your T lady to the CEO, it's very important to promote that culture of security awareness. So someone doing your moving your files, someone cleaning up the table with personal information should be aware of how to dispose or how to carry out these activities. So training programs, regularly train employees on best practices, and of course, encourage reporting. So be it a spam email, be it you've seen a paper next to the printer with sensitive information. So encourage this kind of reporting to be able to protect your data. And of course, as mentioned earlier, so collaborate with industry partners, leaders. So you have lots of partners with experience in cybersecurity, so they can easily assist in terms of how you should secure your digital solutions. And of course, when we look at digital solutions, we're also looking at interconnectivity between the solutions. So having APIs, having webhooks, having open points, allowing different organizations to talk to each other. So in order to protect those kind of environment, it's important to have sandbox accounts where it's a more controlled environment to test new technologies, new ideas, new integrations before pushing anything live. And of course, having the mechanism to continuously have feedback in terms of security performance around your solutions. So I've been a bit quick just to be on time. I think I am on time.
You're very much on time.
Yeah, I hope it was not too quick.
Thank you, Uways. So to the members of the audience, we do have a few minutes here. If you would like to ask some questions directly to Uways here on his presentation, we'll wait for maybe some questions to come in just to reshare a little bit of the key takeaways that I got from your presentation. We're looking at how it is important to set proper digital first and security first foundations when we're talking about security in financial services, investing in the right cybersecurity tools and strategic partners, and also promoting a culture of security awareness. I think those are the right words to help Sanjay head into the next section around AI. We actually have some results coming in from our poll earlier, which I can share with everyone here. Definitely AI takes the lead. So thank you, Uways. That was insightful. Maybe one question for you on this note. As you highlighted the role of AI and cybersecurity in enhancing operational efficiency and risk management, is there an example of how maybe Page Payments is integrating some of these technologies you've mentioned while ensuring consumer trust?
So being in the payment industry and being offering solutions dealing with payment processing. So we at Peach Payment we've integrated 120 algorithms looking at fraud detection live. So those tools allow a proactive approach to identifying any kind of fraudulent use of credit cards, any fraudulent use of any kind of other payment methods online. So we have actually a risk department and a full set of processes which are automating this detection. So yes, we have quite a lot of tools that we're using to proactively detect frauds live.
I'm not going to ask for more details. We do have a question that came in from Ronald now, if you would like to take this one, which is, how do fintechs manage the cost and skills requirements for compliance with the security standards of the financial institutions with which they integrate, since the fintechs don't have access to similar budgets? Any thoughts you would like to share on that?
Can you repeat the last part, since we don't have access to?
Since fintechs don't have access to similar budgets as bigger financial institutions, how do fintechs manage the cost and skills required for compliance and with cybersecurity standards? How do we go about it?
So being compliant to those requirements or regulations, unfortunately, it's not about the cost. So it's mandatory to be compliant, be it, whichever the cost. Yes, I understand to be compliant, it's costly. But to be able to make your customer trust in your service, you have to invest into what's required. So at Pitch Payment, what we do, we have our compliance team sitting and looking at all the mandates coming from those institutions and doing the implementation. Of course, yes, it is costly, but it is something that we need to do to ensure that we are compliant. That's how it is. It's a highly regulated industry and costly, I would say.
How significant a component of your budget is that?
So that is
I don't
Ronald.
have the yeah. So Ronald, I don't have the exact kind of percentage but it is a big one. I can say it is a big one. I don't have the exact figures because the team itself is a big one, and being the mandates come on a monthly basis, and you have to quickly adapt and iterate, be it in terms of engineering, be it in terms of product, be it in terms of onboarding or risk. So it's across teams, and it is very costly indeed.
Are there any organizations that are kind of productizing, maybe helping fintechs to meet these requirements at a lower cost?
Indeed, I've seen companies offering services such as onboarding, KYC, and so on. So you have the option of outsourcing part of the operation. But of course, should be careful because depending on what kind of license you have and what kind of regulation you're playing in, sometimes you can't outsource key functions. So it depends. It depends on what kind of services you're offering.
Thank you.
Thank you, Uways, and thank you, Ronald. So we do have a few new questions that came in, but we'll keep them for the end of our session. Thank you, Uways, for your presentation here. That was very insightful. And so we'll flow into the next section of our webinar now. And building on what Uways shared, I would like to call Sanjay, who's already here, on the virtual floor. Sanjay, I would invite you to share also a few words about yourself. And as we head into the discussion on some of your best practices, some potential risks and trends in the AI space. So as you can see from our poll, everybody's very interested in your subtopic of the day. We look forward to learning more from you. Over to you. Thank you.
Good afternoon. My name is Sanjay Mungur. I am, as Benazir mentioned, I'm the founder and CEO of FinClub. So we are a peer-to-peer lending platform. We started if I may say, the development phase about 5 years ago, but we have really started lending operation just under 3 years. So I think it's also important to understand a little bit why FinClub, why we decided to come up with a peer-to-peer lending platform. I also wear another hat, which is Protect Mauritius, which is a SME support organization. We work in Mauritius, obviously, but in some, and also in some 20 other countries, 22 to be exact, other countries, mostly with institutions, but also with corporates, private companies. And we were in 2017 called upon by the government of Mauritius to develop a 10-year SME master plan for the SME sector, which is currently under implementation. Wherever you go, whichever country, and definitely Mauritius is no exception, one of the major problems for SMEs is access to finance. So we thought, what can we do about it? How can we prepare something to help SMEs to have access to finance? Because as you would know, whether in Mauritius again or in African countries, the big problem is, for example, SMEs are not necessarily formalized. So it can be a self-employed person, or it can be an incorporated, an SME, a company. They might not necessarily have 2, 3, 5 years of financial footprint to justify why they need funds. They might also not necessarily have a continuous flow of cash or income. For example, seasonal farmers, they have their income in bulk during certain period. And therefore, looking at all these challenges and issues, we thought that, okay, what can we do about it? What can we do to come up with an alternative solution? Obviously, we did some research and we found that the wheel was already invented. There is no need to invent the wheel. Peer-to-peer lending platform exists already, invented by the first one being Zopa. I think it was 2005. The second one that came up was a lending club in the US. Zopa is it's a company from the UK, lending club from US. Initially, mostly in the developed world, but slowly but surely, it has propagated to, Asian countries, Philippines, India, and so on. And now, also coming to in our part of the world, in Africa. And we've been lucky in some way that the government has created a bespoke P2P license, which, for example, where we, as mentioned earlier on, we were the first one to work with the Financial Services Commission and obtain a license. Obviously, being a financial services company, we are highly regulated, and people would know the financial sector is generally highly regulated, but in Mauritius, people would know that we're a little bit more than typical. Obviously, be it any financial company, it is important that we are able to, especially, for example, in our case, FinClub, where we have a staff base of 24 people. Out of them, a third, I think 7 or 8 people on the IT department. It was important right from the beginning, at the conception of FinClub, that we use as much as possible technology to facilitate our services. Okay, and obviously with the advent of AI, artificial intelligence, that has been facilitated further, and we have right from the outset, as I mentioned, tried to maximize the use of AI. For example, typically, if you take a loan from a financial institution, there's a contract that's being drafted. And typically, in the historic type of banking facilities, you would see that contract being drawn manually, someone using a template, editing as per requirement, and then putting it in execution. Well, we obviously did the contrary. We, at the outset, we automated those services. For example, the contract has been automated right from the beginning. So if someone take a loan with us, it's digitally signed, be it ourselves, one of the parties in the peer-to-peer lending, be it the lenders, but also the borrowers. Everyone is signing it digitally. So, like us in any financial institution, operational efficiency and cost reduction is critical, and it is important. The second point, I think, for all financial institutions, and I think you always just mentioned that earlier on. For example, in terms of compliance, risk management, fraud detection, that's a major cost associated. And in our case, if you remove the 8 people that we have in the technology department, we are left with about 15, 16 people. Obviously, we could not have like dedicated 1 to 3 people to kind of doing all the compliance work. So at the outset, again, we thought that it would be important how to automate firstly, and then thereafter use AI to facilitate that part of risk management and fraud detection. Now, obviously, all that are reliant on data, access to data, and that's very often is a major challenge, especially in Mauritius, for example. But with the data that we have, or any financial institution would have, it allows anyone to get enhanced insight, to look at customer behavior, data analysis, and so on. That obviously helps to personalize your offering, but at the same time, at the receiving end, the customer, get a personalized service and a personalized experience. Obviously, AI therefore comes with the risk. Again, Uways just mentioned about some of the risk, and I think it's very typical, especially in the current circumstances, for anyone who is Mauritian would know, AI is very much the talk of the town at the moment. So using AI ethically, especially in financial services, is becoming important, and it is obviously very critical. Again, mention has already been made about some of the issues regarding ethical use of AI, but I think first and foremost, the regulatory and compliance part is critical. It's very important because we are financial institutions, and being able to use the data that we have and the tools that we are developing in a very transparent and accountable manner is critical. Okay, it's critical because then there is a responsibility. There is a responsibility from any service provider to make sure that whatever information you're collecting remain within the domain of your company first, and then for the purpose for which it has been collected. That's again, it's critical. And therefore being accountable, putting up tools to monitor those data, monitor those accounts, and maintaining, because when you start having a lot of data, for example, in our case, we can say today we have about 18 to 20,000 data sets available for different individuals, be it borrowers, lenders, and so on. So we obviously have got very critical and very important responsibility, firstly, to ensure that data privacy is fully adhered to, but also in terms of the security. Okay, the security of data. Very often, often we hear about breach in security and data leaks. So that's critical and that's important. And that's also important because it is also, in a certain way, dependent on the security system that has been put in place by the financial institution and the risks associated. And finally, obviously, I've just listed a few of the critical and important one, but I think one of the very important facet of ethical AI in financial services is, for example, how biased the algorithm that you are developing, the data lake that you have, the algorithm that you are developing, and the conclusion that are made therefrom. If you, for example, let's say if you're in the lending business and you put, okay, people in Plain Williams, for example, just for argument's sake, people in Plain Williams don't pay. So that creates some form of bias towards your algorithm. And therefore, we've got to be very careful because it can be, obviously, I've taken a ridiculous example, but when you go granular, there are obviously many possibilities of having bias incorporated in the in the algorithms that are developed in the AI model that are being used. So as I mentioned, we are a peer-to-peer lending platform. And how are we using AI in our particular context? And that's why I mentioned that probably instead of for me to talk overall, it would be more appropriate that I speak more specifically about what we are doing and how we are using AI and how we are able to improve our efficiencies. Okay, and why we have to do it, because you have to also look at the outcomes so far, the results, the KPIs so far, to ascertain whether it is the correct route that we are taking. So coming back here, we are, as I mentioned, a peer-to-peer lending platform. Okay, we've got three parties involved in a peer-to-peer lending platform. Firstly, ourselves, FinClub, which puts up the platform. Then you have got borrowers. Now, in our case, borrowers can be either individual, groups. For example, people can have joint loan, husband and wife, or there could also be, for example, cooperatives that are applying for loans. We can also have SMEs, MSMEs, micro, small, and medium enterprises. But these people can also be self-employed. So, second party in this ecosystem of the borrower, and the third ones are the lenders. Now, in our case, again, lenders can be individual, can be group, can be corporate. SMEs can also be financial institutions. Now, beyond that now, we are pushing things through to, for example, use agents, use merchants, employers, channel partners. For example, we are now able to put up channel partners whereby employers, people working in a particular company, employees, can apply for a loan through their employers to FinClub. So that already put another layer of protection, if I may say so, of security, if I may put it that way, or enhance KYC because the employer already knows an employee. So people can therefore apply for loans directly through employers, and these are the kind of ecosystem that we are putting up. Again, briefly, when we are talking about loans from borrowers, today we are 100% online. Okay, obviously there are important risks associated with online. For example, when we set up about 3 years back, our loan approval rate was something like 2, 3, 4%, because anybody having the possibility of an online application will apply. So on the one side, we were having a lot of application, not necessarily people who could get the loans for various reasons, but also we had to put up tools to improve productivity, to efficiency of our processes, but also at the same time to ensure that we improve on identity verification and reduce on frauds, online fraud. Our loan today are between 10,000 rupees and 2.5 million rupees, ranging from 1 month to 36 months. And obviously, we were talking about transparency and so on. For us, there is no hidden cost. For example, if someone take a loan, you want to pay back early, there's absolutely no hidden cost, so the person get that. Likewise, for the borrower, it's online. People can get up to 14% interest per annum. So there is a competition. Obviously, the platform has to be trusted, secure, and offer various possibilities, because if people want a loan, the first question they might ask, why should they come to Fintech? Now, in our 3 years of existence, obviously initially it was a very slow start with limited tools and limited number of functionalities that were involved. But today, after just under maybe just over 2.5 years, we have had 8,085 loan application, out of which something like 1,122 loans have been funded, which is I think about 12-14%. In terms of the value of the loan application, is 765 million rupees, and in terms of loan approved, 119.5 million rupees. Okay, so it's a large volume, and even that 765, we are actually quite reaching to 1 billion rupees of loan application. Potentially around November or December, we will reach that figure, to tell you that how the incremental aspect of things going on. And then when you look at, for example, our default rate is 2.51%. Okay, now if you go on Bank of Mauritius website, you would see that generally the industry standard is about 4.5%. Okay, so we are at the moment able to even better that thing. And how are we doing it? Is precisely using AI and precisely using various AI tools, be it for underwriting, be it for digital identity verification, but also in terms of processing and also in terms of customer support. So at the outset, obviously, I mentioned that earlier on, security, the robustness of the platform using, for example, AI antivirus tools, obviously not developed by us, but ensuring that it's incorporated on our platform, ensuring that there is that bias mitigation, having a certain fairness in our system was important, because remember that we at the outset we were talking about targeting people at the lower end of the pyramid, at the bottom of the pyramid, offering them alternative financial solution. So where are we using AI? Finbot. What is Finbot? I will explain a little bit more, but it is an AI tool that we have developed. It's trilingual, English, French, Creole. Actually, we are quite proud for, again, a lot of talk of the town in terms of whether AI can be used in Creole at the moment. But here we are talking about written support. So we've developed a trilingual English, French, and Creole Finbot. If you go on our platform, finclub.mu, finclub.mu, and you would see a little bot there available to help you. The second one is our FinID, which is our digital identity and fraud verification model. And the third one is FinScore, which is the underwriting, AI ML driven underwriting process. Remember that we have received 8,085 loan application for an amount of 765 million rupees. So it's a lot of processing required. So what we did was really to develop a model, AI ML model, about using the data, using first the application data we receive, but also other types of data to ascertain that people who we are giving loans because remember, it's lenders' money. It's not our money. It's lenders' money. So to develop those types of models. Obviously, we, as you can see, we've developed, our model is based on having 48 subparameters, out of which they can be classified into 3 categories. To look at the financial, number 1 is the financial, the second is socio-demographic, and third is behavioral. Financial, like any financial institution, you need to check whether the person has the capacity to repay back a loan. And traditionally, again, many financial institutions, they will use, for example, the FICO model, relying heavily on the MCIB, Mauritius Credit Information Bureau data from the Bank of Mauritius to churn out whether someone can be given a loan. So, there are a lot of parameters: credit repayment history, amount owed, length of credit history, and so on. And that's important. For example, length of credit history. If you have many years of credit history, it's good to ascertain whether your credibility in terms of repayment. But how about a young graduate who doesn't have any loan and doesn't have any credit history? That's where we also then look at the other 2 sets of parameters, socio-demographic and behavioral. Now, socio-demographic, basically looking at, for example, the employment history, looking at the employment sector, looking at, for example, whether the person is owner of his or her own residence, whether it's a renter, his own, how long been staying there, whether the person has kids, the stability of that sector, how cash flows are managed. Because obviously, for example, we ask for 6 months of bank statement, but we don't have time to analyze those bank statements. So we have had to develop algorithms to extract data from bank statement and how to analyze it. And finally, the third family is behavioral aspect. Okay, the behavioral aspect in terms of what can be done and what should be done, looking at behavior, online engagement, illicit behaviors, and so on. And all that extract the information to give us this dashboard to tell us, for example, how long credit history, how many credit accounts, the duration, the amount, etc., etc. And then on the right-hand side, because we still feel we do not have enough data, and especially definitely when we started, we are using a hybrid model at the moment. So on the one side, using a logic-based scoring, as you can see, 475, that's logic-based based on data. And then you have the AI risk category, C category. So if you go on FinClub platform and you look at life loan, you would see A+, B, C. What those mean is the risk category associated with the loans. The second point I wanted to mention in terms of that is the FinID, the digital identity and fraud detection module. Okay, obviously, people whilst applying, they will upload their ID cards front back. They would also be uploading their proof of address, bank statement. So as you can see, the 5 different steps involved. One is digital identity, pre-verification of those identity, whether they are fraud, whether has been tampered with, and so on. Second, in terms of identity proofing, to check whether you are who you say you are. Third is document collection and verification. So we would be checking, for example, whether the bill, your address matches what you have said, whether the bill name is exactly the same, whether areas and so on, the residential area and so on are matching. And obviously, we have a lot of thorough check that we will be doing based on external data and external information that we can gather, okay, from various sources. And we hope that we will have access to, for example, the government information highway, the central KYC that the Bank of Mauritius is coming for. And obviously, all that are turned into a risk assessment decision module, which really give us a dashboard like this for someone who applies with us. For example, you have obviously the client profile, name, residence, place, etc. You would see the document that have been used, and obviously lower side of the screen, left hand side, entity, whether it's a natural person, industry, then we are starting to analyze the risk, and many other facets as well. For example, whether the person appear on any website, FSC, flagging any names and so on, but also not just FSC, but also ICAC and FIU, but also international, FATF lists and so on. So as you can see here, this is a process that goes and fetch the data from many sites to tell you that the person, whether it's blacklisted or has been anticipated. But also we look at, on the right-hand side, client screening, for example, any adverse media comments, any adverse, search obtained from, various sites, and also, this FinID, our digital identity and verification and fraud, it's ongoing. It's being built, it's being used, but still a lot of reinforcement, a lot of new addition is being made. But as you can see, there are so many things. For example, we can check mobile number, email address verified, but also have a IP address verification in terms of the map and so on. We also, just to close up, in terms of our chatbot, that you guys can go on our platform. Basically, you can get the support in English, in French, and we are very soon coming up with an addition to this chatbot on WhatsApp, where people can fully onboard on WhatsApp. So there is a lot of innovation. Basically, we pride ourselves, with that. Voilà. I think I would stop here, Benazir, because
thank you, Sanjay.
I'm sure I've run out of time, but
just
a few minutes. Question that you may have for me.
So if I can just here recap in a few words and the takeaways before we head into the next section. I will be stopping your screen share, though. I would ask you to stop sharing your screen. So what we've learned here, in the case of FinClub, but also in general, automation can help significantly reduce operational costs. Though access to data remains a challenge, each institution can tap into their own pool of data to generate customer insights. And so there's a call here to all financial institutions and mainly fintechs who are still in their early years to develop a strong sense of responsibility as rules in the AI space are not yet fully defined. And there's a certain level of bias that remains in the algorithm. So that's few takeaway that I've got here. Of course, we'll have this recording up on our YouTube channel after the event, so attendees can always come back for this recording. Unfortunately, we've run out of time for taking questions just now. I can see your hand is raised, Loic. I would ask you to not leave. We'll get to your question at the end of the webinar. For now, I will call on to Arvind. So thank you, Sanjay, again, for your intervention. Let's flow into the next section with Arvind, who will take us into some of the challenges that organizations face when it comes to maintaining ethical standards. We've just been talking about bias in algorithms. Please share on how critical the importance is of regulatory compliance in all this space. Thank you. The floor is yours.
Yeah. Good afternoon, everyone. Thank you for taking the time to be here today. So I'm Arvind Nundloll, IT manager at Emtel, with over 14 years in the telecom industry, focusing on mobile financial solutions and fintech systems. So I currently lead a team dedicated to developing innovative digital payment solutions in the form of our main product, Blink, that prioritize compliance, security, and also enhance user experiences. So today I'm going to discuss the ethical implications of data use and regulatory compliance in digital transformation within financial services. So as technology, I think technology reshapes our industry. Our ability to handle data responsibly becomes crucial, especially when it comes to services like digital payments, where data flows are constant and security is essential. Before we dive in, just want to quickly have a brief description of our service, Blink. So Blink is an app developed, maintained by Emtel. It's a digital payment service where you have several features where you are able to do instant payments, scanning QR code for payments, paying your bills, and doing recharges, amongst many others. And this, of course, is a platform regulated by the BOM. So let's, before we dive in, just wanted to have a quick introduction on the digital transformation in financial services. So this digital transformation, I think, has become a fundamental force in financial services, and it's changing how we interact with customers, manage risk, and deliver services. Data, I think, now drives our decisions and strategy, enabling services like personal offers, instant transactions, automated loan approvals, and even creation of a digital bank account. Yet this reliance, I think, on data also brings serious responsibilities. As a payment service provider, we deal with some of the most sensitive personal information like financial records, transaction histories, and identification details. So customers trust us with this data, expecting us to protect their privacy and use the information ethically. So today I'll focus on the principles and regulations that guide us, as a payment service provider, in doing just that. And I'll use digital payments as an example on how these principles are applied. Secondly, the importance, let's look at why data is central to digital transformation in financial services. So data powers the advanced tools we use to make financial services faster. We've seen it with FinClub, one very good example of a tool where it's making the analytics around transactions to real-time fraud detection and credit loan scoring. So data also enables innovation that makes lives easier for our customers and strengthens our ability to mitigate risks. This statement might sound familiar. With great power comes great responsibility. So when we collect, analyze, and store this data, we must handle it carefully and transparently. The sheer volume of data we handle also makes regulatory compliance even more complex, as we have to protect this information from unauthorized access and ensure it's used responsibly. Our challenge is to use data to benefit customers while keeping it secure and respecting their rights. Before we dive in the core topic, quickly, just a quick overview of differentiation between law and ethics. So to start with law, the terms law refers to a set of rules and regulations that are in place to govern the community, and these rules are created to protect the society, and it is binding as such and enforceable. So law provides a method for resolving conflicts and imposing penalties for those who violate them. And ultimately, the goal of law is to promote justice, maintain order, and safeguard the rights or freedoms of all members of the society. On the other hand, ethics, the concept of ethics is about the more of a moral principle and values that steer human behavior and decision-making. So whether at an individual or at the society level. So it involves examining what is considered acceptable or unacceptable, good or bad, just or unjust, and how these criteria can be applied in various situations. So diverse factors such as cultural norms, religious beliefs, personal experiences, and even philosophical theories influence ethics. Now, let's look at what let's look at what data ethics is. In order to provide a very clear understanding of the concept of data ethics, I present two different definitions of the terms. So according to a research paper published by Oxford Institute and Alan Turing Institute, data ethics is defined as a new branch of ethics that studies and evaluates moral problems related to ethics of data, the ethics of algorithm, and ethics of practices. On the other hand, Open Data Institute defines data ethics as a branch of ethics that evaluates data practices with the potential to impact people and society adversely. So Open Data Institute simplifies the definition of it by wrapping the ethics of data, algorithm, and practices into data practices as a whole. So there are various definitions and perspectives exist about data ethics, but we can agree that data ethics fundamentally is about a moral code of conduct or set of principles used to evaluate data practices that have the potential to impact society. So now let's look at the ethical principles in data use. First one, transparency and consent. So transparency is foundational in building trust. We need to inform customers why we collect their data, how we plan to use it, and who it might be shared with. This is especially important for services like digital payments, where transactions involve multiple stakeholders, banks, payment processors, merchants. So customers should know if and how their data will be used beyond the payment itself. Maybe one example that I can take that's not directly related to payment, but it is a case which concerns the transparency and consent of users. So I think we were all concerned and intrigued in 2018 when it was revealed that Cambridge Analytica obtained data from millions of Facebook users without explicit consent, using it for targeted political ads. So Facebook's lack of transparency about data sharing practices led to a major scandal worldwide and regulatory backlash. And this led to a $5 billion fine, I think, from the FTC in the US. So this case illustrates the importance of transparent data practices and obtaining clear, informed consent from users. Customers must know how their data will be used, especially when shared with third parties. So beyond transparency, customers must provide informed consent for their data to be used. Sometimes it is just a checkbox that says, I agree, but I think users is like, yeah, whatever, I just check this box and I'm not even sure. We need to present the data in a way, how it is exactly going to be used. Second is about data privacy and confidentiality. So as a payment service provider, I would say our ethical responsibility to protect customer data goes beyond technical requirements. It's a moral obligation to prevent unauthorized access to sensitive information. Privacy, I think it is not just a regulatory requirement, it is a right. So things like encryption, secure storage, and limited access to sensitive data are a few ways we ensure privacy in digital payments. For example, the Blink privacy notice, accessible on Blink's public page, you can see the link on the slide, outlines Emtel's approach to data collection, processing, and storage in compliance with our Data Protection Act. So it explains how Emtel collects personal data, the purposes for processing, user rights like access and data correction, and data security measures. I invite everyone to access the link displayed to see the full privacy notice, where we can see that there's clear information on how data is used. We also ensuring the data handling that tackles the part of data privacy and confidentiality. And also it provides user the access to their data and also correction, and if ever they need to delete their data. Third one is bias and fairness. So as we adopt machine learning models for profiling, loan approval, or fraud detection, and even marketing, we face the risk of bias in algorithms. It has been mentioned by Uways and even Sanjay. If we're not careful, these biases can lead to unfair treatment of certain customer groups. So I think we've already covered this part. I won't go too much into detail in this. Last one is about data ethics framework. So creating a data ethics framework formalizes our commitment to ethical data handling. This framework provides guidelines for the entire organization, ensuring that data usage aligns with our values and it respects the customer rights. Now let's take a look at some ethical considerations in digital payment. So digital payment, I think, provide an excellent example of the ethical implications we face in financial services. Real-time transactions and constant data flows make ethical data management complex and crucial. So data integrity and security. So what I want to highlight here is in digital payments, any manipulation of transaction data can have immediate financial consequences. Ensuring data integrity means putting strong security measures in place, like end-to-end encryption, to prevent tampering and ensure that data reaches its destination unaltered. Second is user consent in data sharing. Well, many digital platform services work with third-party vendors for services like fraud detection and payment processing. So we must inform customers if their data is shared with these third parties and ensure that consent is obtained. This, I believe, will build on transparency and trust. Thirdly, tracking and anonymity. So here it's about ensuring that whatever data you possess on a user is not linked to, you won't be able to identify the user. That is, we need to keep the data separately. So tracking user behavior is valuable for fraud protection, but we must anonymize data wherever possible to protect privacy. So now some best practices. So for ensuring ethical data use and regulatory compliance in digital transformation, especially in financial services, some best practices that are very useful for building trust with our customers need to be enforced. And this is a concept that needs to be from the start. First one, privacy by design. This is a proactive approach that embeds privacy into every stage of the product development lifecycle, or system lifecycle. Instead of adding privacy measures after the development, we start by designing systems that respect user privacy. So, for example, in digital payments, this might mean encrypting transaction data by default, or allowing customers to manage their privacy preferences easily. By integrating privacy early, we ensure that customer data is handled with care throughout its journey. Second one, security by design, also mentioned by Uways. I think this, just like privacy, security should be foundational in any system. Security by design means thinking about potential threats and vulnerabilities from the beginning and throughout the development lifecycle of a product, so that it helps in implementing strong safeguards against any vulnerabilities that can be identified. So in financial services, where we manage sensitive financial data, this could involve multi-layered security measures like multi-factor authentication and secure access controls. This approach helps. So multi-access control, I think this approach will help reduce the risk of data breaches and ensures that we are protecting our customers' sensitive information effectively. Third is automated compliance tools. With evolving regulatory requirements, keeping up with compliance can be challenging and costly, as mentioned earlier. So unfortunately, we have to rely to some of the tools that helps us. We need to invest in tools that helps us manage this complexity by monitoring transactions, flagging suspicious activities, ensuring that our data handling practices stay within legal boundaries. Yes, it is an investment, but this will also enable us in providing an ethical an ethical framework, especially in digital payments, where automated tools can support anti-money laundering efforts by analyzing transaction patterns in real time, providing alerts and helping us meet regulatory requirements more effectively. And lastly, a data ethics framework. So this provides guidelines and principles for using data responsibly and aligns our practices with our company values. So this is more internal. So this framework helps us navigate complex situations where data use might be legally permissible, but could raise ethical concerns. So for instance, our framework might outline the ethical handling of customer data for personalization, ensuring that we respect their privacy and preferences. So by establishing a strong ethic framework, we can foster a culture of responsibility and accountability across the organization. Now, regarding regulatory compliance, I have listed 4 main frameworks that are essential. So again, regulatory compliance, it is foundational to building trust in financial services. There's no way out of it, especially as we transition to digital models. So in Mauritius, several key regulations guide approach to data management, cybersecurity, and financial integrity. So let's briefly go through each one of them. So for Data Protection Act, this sets a standard for collecting, storing, and handling personal data. It aligns with the EU's GDPR, mandating that personal data can be processed lawfully, transparently, and securely. So for financial institutions, this means we must inform customers about how their data is used, protect it from unauthorized access, and retain it only as long as necessary. So compliance here isn't just about avoiding fines, it's also about respecting customer privacy and building trust in the digital era. The National Payment System Act, secondly, this is critical to, I believe, stability and integrity of payment systems in Mauritius. We've got mobile applications like Blink and other Pop and even MyMoney. So these this act provides the framework for regulating and overseeing payment services are safe, efficient, and also accessible. For digital payments, this means we need to comply with operational guidelines that protect the interests of users and maintain transaction reliability. The Act helps foster a trustworthy environment for payment innovations like mobile money, and even digital wallets, while we can say that the tendency now is more towards digital banking. Third is AML and KYC compliance. So the AML and KYC regulations are essential also for financial institutions, and that is worldwide, not only in Mauritius. So these regulations require us to verify customer identities, monitor transactions for suspicious activities, and report any signs of money laundering or that could potentially be a financial crime. For digital payment, this often means using real-time monitoring systems to detect anomalies and ensure that transactions comply with these standards. Also, AML KYC compliance helps prevent illegal activities and demonstrate our commitment to ethical financial practices. And finally, cybersecurity framework. So this is a critical component, of course. Financial institutions in Mauritius must adhere to cybersecurity standards to protect threats such as hacking, data breaches, and financial fraud. So this framework emphasizes strong access controls, data encryption, regular vulnerability, incident response planning. So all these elements is something that will bring an element of trust and also a sense of fairness to anything related to transactions, to the use of your product, and also give a sense of security that can only build trust in users. Also, regulatory compliance is something that also, I would say, compared to African markets, is what is making Mauritius a bit more ahead, as we have a very good regulatory framework in place that is also giving a good, I would say, a sandbox, allowing fintech startups to also be able to launch their services in a very controlled framework. To conclude, so ethical data use and regulatory compliance, I think, are not mere obligations. They are fundamental to building a trustworthy and resilient financial services industry. So by embedding these practices into digital transformation, we not only protect customer rights, but also help in building an ecosystem that fosters innovation and trust. As we look forward, I encourage all of us to prioritize these principles, ensuring that our services remain ethical, compliant, and worthy of the trust that customers place in us. So thank you for your attention. That was all for mine.
Thank you, Arvind. I think your presentation here rounds up our discussions and our theme today quite well. What I retain here is, as much as it is important for us to innovate to better service our customers across the industry, it is a moral obligation from service providers to ensure they're also respecting customers' rights at all levels and putting in the resources to that objective. And we also call for customers to also learn about how their data are being used by financial institutions that they are subscribed with. So maybe I could just follow up with one question for you here with regards to your presentation. So Blink by Emtel today serves a diverse customer base. You've been around for the last decade. Could you share maybe some approaches of how you maintain transparency about data usage, especially for customers who might not be familiar with complex digital privacy tools?
I didn't hear your last part of the question.
So for your customer base who might not be too familiar with all this evolving digital privacy discussion and all the regulations around it, can you share some approaches of how at Blink you're able to involve them in the discussion or help them stay aware of what's changing?
Yeah. So we have on our website, we have our privacy notice that is available to the public that clearly states all the measures that we are that we are putting in place to ensure that whatever data that they are sharing with us, what purpose the data is being used for. We are not going to, for example, we've seen cases of the data minimization is something that we've seen some cases where users are sharing their data, but it's being used for other purpose, or sometimes for the sake of sharing the data, additional data that's not really relevant to the platform or to the product is being requested. So we have a privacy notice that's available to the public that clearly that I've shared the link and anyone can access it. That will clearly show what are we using this data for and how it is being stored, what are the security measures are in place. And also through that same page, you also have the access to, let's say you decide you want to delete your data completely from our services. This is something very important. We need to give the user this access, and it needs to be very easy, something very easy to do. Sometimes we see this step as I've seen products myself, I experienced it myself, where you ask question, are you sure you want to leave us? Or we are very sorry that you're leaving us. Several steps until yes, and then finally you get to close your account or delete your data. But for us, it's very straightforward. It's available, and again, everything is based on the Data Protection Act of 2017. So we work within that framework, and we ensure that whatever is there in the Data Protection Act is being followed. And we also ensure that we have regular audits, whether these are internal audits or external audits, that ensure that we are compliant. So these are all the measures that we are putting in place at our end to ensure that whenever the users are providing us their data, they know exactly what it is being used for, and it is being stored in a very regulated framework, I would say.
Thank you for this very comprehensive answer. Maybe just to push a bit deeper here, as much as we have the Data Protection Act for Mauritius, and if you look at the EU, you obviously have the GDPR. What are your thoughts on how things are evolving for the African continent at the level of data management? Are there any works that you know of in this space that you could mention?
Well, just maybe compared to the African market, maybe only South Africa has, at least from what I've read, they have a very good data protection measure. I think it is the protection of POPIA. So compared to African markets, many African countries are still developing comprehensive data protection and privacy laws. But South Africa, I think with the POPIA, they have made significant strides. However, still, I believe that Mauritius' early alignment with international standards, like you mentioned, the GDPR, gives us a competitive edge in attracting maybe global financial service players.
Right. Well, thank you for that. I will now turn to the audience, so I will call on to Loïc Piquet. Thank you for raising your hand earlier. I know you've been waiting for a while. You should be able to enable your mic now. We have enabled your mic for your question. Would you like to ask your questions directly to our speakers now? If you can hear us, Loïc. Okay, So while we wait for him, we'll take two of the questions that were sent in the Q&A earlier. That was sent during Uways' intervention, but of course, all three speakers are called if you would like to share any feedback or answers on the questions. So we were asked, how do we monitor or screen transactions with regards to high-risk beneficiaries or countries? What are your thoughts on this?
Okay, so let me answer this one, Benazir. So first, as all three of us mentioned, so as Mauritius is very highly regulated, when we are onboarding merchants as beneficiaries, we have lots of risk analysis being carried out by us and by the banks, so acquirers and us. Both we have our risk, our risk panel, our risk analysis being done. So this is where we already eliminate those high-risk beneficiaries, where we don't even allow them to collect funds online. So we don't even onboard them. So it's not about getting them live and then monitoring what kind of transaction they're doing. So there is something called the MCC list. This is where the banks and partners like Peach Payments align in terms of what kind of services those merchants are doing, what kind, be it, they're doing e-commerce with what kind of e-commerce, what are they selling, to whom are they selling, and so on and so forth. So this is where we eliminate that risk from the beginning itself.
Okay, thank you for that. We'll go to the second question here, which would be, just bring that screen up here. How do you visualize the fintech ecosystem in North African countries in the near future? What are the main expected changes that you can think of?
So I'll take that one also. It was us during.
Okay, go ahead. Go ahead.
But feel free to pitch anyone who want to pitch in. So I think as Mauritius has done it very well. So the national payment switch is something that we are proud of, and which allowed Mauritius to enable the QR code payment, as we know, the MOCAS. So I think the Northern African countries would adopt such technologies going forward. And so the fintech industry should prepare themselves to, start thinking of integrating such capabilities within the gateway, the services that they're offering. So I think this is where, at least within my segment, that I'm seeing how the Northern African countries are moving towards. So that's my point on that question.
Thank you, Uways. Any additional comments from Sanjay or Arvind?
Yeah, I would tend to agree with what Uways is saying. I think in Africa, we've seen a very successful success story in M-Pesa that mainly relies on mobile money. But I think just like in Mauritius, we've seen with the MOCAS platform and the NPS, how this national QR code has taken over. I believe in the near future, this is something that we can also expect in the at least in the North African region. So I think the financial inclusion initiatives by the central bank government in North Africa, such as Egypt and Morocco, are likely to increase initiatives aimed at reducing the unbanked population. So fintech startups, I think, may collaborate with traditional banks to create more inclusive financial products that would move them more towards an open or digital banking.
Thank you for that.
Yeah.
Safia, you have been given the right to also speak if you would like to. So just so you know. Yes, Sanjay.
Sorry, you're giving me the mic, right?
Yes, I was just informing our audience member here that they can speak as well.
Okay. Now, I'll just respond to the earlier question, fintech in Africa and fintech in North Africa in particular. I think if we go back a little bit, one of the truly forefront innovation in payment in fintech in general and payment in particular, has been, as Arvind mentioned, M-Pesa. And M-Pesa came into operation back in 2007. Now, 2007, which is what, 15, 16, 17 years back? So it's a lot. In our case, maybe if you look at fintech evolution, we have like, what 6 years, 7 years since Juice, potentially, one of the first truly autonomous fintech companies that within MCB, obviously, that came into being. That started to push the boundary. So if we are looking at the African context, we have a lot of catching up to do. Okay, that's one. Secondly, obviously, that catching up, fortunately, has happened pretty fast. If you just look at the payment ecosystem, obviously, you've got many players now, and important players as well. So that has been a good thing. But when you look at the other side of the coin, to be able to have innovation, fintech innovation, funding is an important criteria. And for the time being, it's mostly, the big three or big four, Nigeria, Kenya, South Africa, and potentially Egypt, that really driving the African fintech scenario. Obviously, new players are coming in. In West Africa, you've got a little bit like Senegal, Cote d'Ivoire. In East Africa, obviously Mauritius, Rwanda coming up. But the interesting point is that each one is coming to try to solve a problem, a particular problem. If you look at, for example, access to insurance, okay? Now we have got many fintech companies, including in North Africa, but also in all parts of Africa. I know a couple in Tanzania, for example, offering micro insurances possibilities. So yes, it's coming up. It's actually booming, and they are able. It's a bit like the mobile phone. Instead of going through line, they pass directly. Made that innovation jump to go on mobile platform at the outset. I think the same thing is happening in terms of financial services, whereby fintech is helping to bypass, the historic service provider, and eventually democratizing that process in offering a variety of services to a large audience.
Thank you for that, Sanjay. So unfortunately, we have run over time for taking more questions for today. I'm just very conscious of time. So for any additional questions that came in, what we will do is we will circulate them to our speakers here after our event, collect their answers, and circulate them back to you as part of our post follow-up email. So I hope that works for everyone. So allow me to thank all of our speakers here today for making this time and sharing their insights with us. I invite you all to follow them on LinkedIn, on their social media, to witness their growth and their journeys. Thank you, everyone in the audience. I really hope that you found this session productive and that you'll leave in here with new insights and perspective. We invite you, of course, to subscribe to our website, to our social media, to stay in touch with our future events. And I thank you, everyone, and I'll see you again soon. Thank you, everybody.
Thank you, everyone.
Thank you.
Thank you.